Hi, everybody. It's Jody Bhagat. I'm joined by Nicole Meyers, my colleague, and we are from Personetics. And we're very pleased that you've joined us today for a discussion topic on delivering personalized advice at scale for wealth management. By way of introduction, I'm the president of the Americas at Personetics, and I've been in the financial services space for a couple of decades. Previously, I was a partner at McKinsey & Company in the financial institutions group, and before that, I was from US Bank and Citizens Bank. Nicole?
Hi, everyone. At Personetics, I lead our account relationships and work really closely with a lot of our financial institution partners as they extend service, across their retail and wealth management base. And my background more broadly is within the financial services space, working at McKinsey and Grameen Bank before that, the microfinance organization. So thank you for having us.
So let's jump into it. I want to start with a couple of points of view around context. And the first one starts with a recent presentation that Walt Bettinger, the CEO of Charles Schwab, made, and some of the comments that he suggested, which is that personalized investing is coming at us like a freight train. And in the excerpt of his discussion, he challenged firms to comb through every facet of their business and interaction with the client to be able to personalize the service. And that means rethinking about how and when advisors engage clients, understand their current situation, their goals, as well as their changing situation. And that relies very heavily on leveraging customer data to be able to have intelligent outreach. And so he really emphasized a relook at how data is collected, analyzed, and then insights are gleaned about clients and their goals. The second point of view I'd like to share is from a recent McKinsey report, where they talk about wealth managers being unlikely to serve clients in the modern age without an effective digitalized operating model. That is a model that combines digital plus human interactions that can allow for efficiency and deliver it at scale, but also adapt to clients' individual needs. So Nicole, I'm curious, from your point of view, how do you think this applies to the wealth management space? And what are the implications?
I think that this is, we're all faced with this kind of changing industry landscape. And wealth management is no different than a lot of the other spaces where we've seen a really dramatic evolution in the way personalization is taking over. And I think we're very focused on personalization because consumers' expectations for service is changing, and their expectations are based on the apps that they use most regularly, social media apps, for example. And so if you think about that type of experience, first and foremost, it's easy. It's so easy in some ways that it's habit forming, and that's really powerful because it gets people to come back. And all financial institutions are looking for their customers to come back as frequently as possible. And I think the other thing that the apps do really well is they understand people's interests and cater the experience to those interests. And so, within this context, right, where wealth management firms are really trying to understand and cater to individuals' needs. And the better that you're able to anticipate those needs, the more successful firms are going to be. So I think this is really the types of experiences that there's a big opportunity to optimize, right? How well do you know the customer? How easy is it to advise them? And how do you adapt the type of advice and service really that you're offering to customers that's tailored to their own personal interests and needs? And so I think these are kind of the three pillars that we're very much focused on these days.
Very good. Thank you for that, Nicole. Maybe for the audience, we'll just take a brief step back and just introduce Personetics. So we are, fortunately, the global leader in a space called data-driven personalization, and it's around customer engagement. in financial services. Our vision is one of self-driving finance, and we partner with financial institutions to really change the way that institutions can engage with clients and do so in a more intelligent and interactive manner. We serve over 80 clients globally. We operate in 28 countries. We've got over 120 million end consumers on our platform. So we're really operating at scale. And we've got, as I mentioned, a variety of clients across banking, wealth, and even companies that are embedded finance companies that are offering more and more services to support customers' needs. And we'll get into that in a little more detail moving forward.
I think that US Bank is a great example of a financial institution that's been able to create, at this point, basically billions of personalized experiences through their digital channels. And we're seeing them touch, all different types of customer segments. And they're doing that through a variety of different experiences. Some of these are bite-sized insights, like on the right-hand side in their mobile app. And there is, I think you're going to see, and part of the reason that they, historically have been ranked amongst the top digital apps in the country is because they're pushing the envelope on creating these personalized experiences for customers.
It's a great example. It also underscores how we believe, at least, to make a provocative statement, that interactions and campaigns will change from kind of banal or just targeted campaigns to intelligent interactions where you're surfacing nuggets for customers to be aware of or to take action on, and offers will be made in that context, which I think is a really exciting future for financial services, and the how you can really build enhanced trust with customers as a result. We recently were asked to present to the SEC Asset Management Subcommittee, which has as its makeup members from Fidelity, Morningstar, State Street, T. Rowe Price, and many others. And we were invited to present to the Commissioner Crawford, actually, and members of the committee, to talk about how data-driven personalization and autonomous finance can change wealth management. And it was quite revealing in terms of sharing how data-driven personalization can really dramatically change the way that wealth management firms interact with their clients and the productivity of their advisors as well. In the lead up to our discussion, actually, Fidelity shared their perspective on advice, and this is a matter of public record now, where he talked about the three different parts of personalization spectrum: the servicing, the insights around actions, as well as managing portfolios. So sometimes when we think as an industry, the wealth management industry, about personalization, we're just thinking about the construction of bespoke portfolio. And indeed, that is an important part of it. And we will see more things like direct indexing and aspects like that will support that. But our focus is really on this middle piece, which is around prompting action. That is recognizing customers' situations, their needs, and adapting as customers' financial situations and needs change, whether they're explicit or implicit, and then being able to engage them to support that as well. So there's three big challenges that personalization can help address around wealth management. We'd like to do a deeper dive into each of these three. So the first one is that in many cases, wealth management firms and advisors won't have a visibility into the entire client's overall financial life. Usually it's just a subset. In fact, it might just be a subset of their investment holdings as well. Secondly, of course, clients have multiple financial relationships, not just on the investment side, but insurance, mortgage, banking, and draw on various kind of advice from all of it. And then the last is the ability or the challenge of really delivering advice at scale. It's very difficult to do efficiently and in a cost-effective way. So what you see is advisors may be doing more personalized outreach to their more profitable customers, but there may be needs in a much broader set of, amongst their broader portfolio, and being able to stay up with those timely interactions that will make a difference in customers' lives is a real challenge. Nicole, why don't you take us through just the next level of depth around each of these three?
The first challenge around lack of visibility, really comes from the fact that the visibility is most clear if you have the checking account relationship and the credit card relationship, right? If we can see the types of transactions that people are making, the more information we understand about their full financial life and their needs, right? That those types of micro trends are most evident on some of the day-to-day decisions that are happening. And obviously, all too often, the wealth manager is different than, say, a customer's primary retail bank. And so, we miss out sometimes on important life changes, such as a family member becoming ill, and all of a sudden medical expenses start to go up. And perhaps there is, a need for additional care. Someone perhaps needs to take out a loan to cover unexpected expenses. These types of things happen, but it's difficult to know that unless there are some types of indicators from the data. Otherwise, we are relying on our bankers to proactively reach out and keep in touch with customers. And not surprisingly, it's hard to have visibility for customers that are perhaps in the mass affluent group that don't have that high touch point with bankers. And the second point, so customers, all clients have multiple financial relationships, especially amongst young affluent consumers that now are spreading their money across, say, some of the robo-advisor firms, more traditional firms, and this is kind of our new reality. And so the more that we're able to understand when new relationships form, the easier it is as well to keep, the easier it is to really be able to offer the right types of service and guidance at the right time. And I think what we're seeing as well from the data is that these new relationships are forming quite quickly. So the barrier, for example, to open up a new account is much lower today. And most financial institutions have improved those practices. And what we're doing, at least from our standpoint, is trying to understand what are those trends and picking up from the transaction data, a new relationship, a new transfer that occurred to a financial institution. That's actually really valuable information, and we wouldn't know otherwise. The third challenge is delivering cost-efficient advice at scale. So going back to the point we were discussing before around the direct relationship between a financial advisor and the client, that relationship is obviously strongest with the wealthiest customers in the portfolio. And as you move down the wealth spectrum, customers have less and less direct contact with their FA. So what we really want to think about is how do we expand the breadth of customers that can take advantage of the types of wealth management services and really deliver high quality advice in a way that's cost efficient to the FI and valuable to the customer.
I think that's really well said. And this is really the crux of the issue, which is how can you efficiently deliver advice at scale, recognizing that not just your higher net worth clients, but your mass affluent clients also need personalized advice. It's very challenging to do, and this is the importance of understanding the data and being able to proactively support advisors in terms of their interactions. So it leads us to kind of the next kind of some of the solution here, which is how to overcome these challenges. And one of the big trends that's happening today is the movement towards open banking, in fact, open finance. That is the putting control in the hands of customers to be able to share their data, their bank data, their investment data, credit data, as well as insurance data. And in the US, we're really embracing this philosophy of open banking and open finance to come. It's happening globally, but we will see an acceleration of it here in the US. And then also data-driven personalization. We think these are two important technologies that will allow some wealth management firms to compete very effectively, and it'll also create some risks for others. And we will see a greater disparity really between leaders that are able to capitalize on these emerging capabilities versus the laggards that they kind of stick to traditional operating models that may be impacted. So in terms of what does open finance mean for wealth management, three things that we would call out here. One is it's putting sharing of data in the hands of customers, providing them the control to do so. For the providers, it's inviting them to have a broader ecosystem to deliver on customers' financial needs, an ecosystem of providers that can address different kinds of customer needs. And then lastly, of course, it's providing an opportunity for that ecosystem to have a more holistic view of the customer's evolving needs. Nicole, why don't you share how the different kinds of providers are addressing this disparate set of financial needs that customers may have?
I think that this, what the slide is really showing us here is that the competition to address customer needs goes far beyond investing. And there are many different players that are all angling to deliver on consumers' financial needs, and they're really blurring the lines on where they play. So, Google is now a player. Revolut, SoFi, Chime, for example, Marcus as well, are going beyond retail banking through the digital channels and really extending the service. And each of these different players are bringing their own strengths, and some of which are quite distinguished within their own markets. And they're heavily leveraging their distribution channels in order to gain momentum. And as a result, they're expanding the range of services to accommodate more and more needs. And so I think what we're seeing is, obviously that the competition is growing, but also there's different opportunities out there for collaboration. And it's unlikely that one player will be able to serve all of these needs, but the degree to which you can expand and extend and deliver on more of these needs and collaborate with other leaders in those specific verticals, and the easier it is to deliver that advice at scale we were talking about.
That really is the opportunity here, specifically around wealth and insurance. While you may not provide the products for all of these needs, your ability to deliver advice by understanding what the customer's needs are can be much more effective. And that's really the opportunity that we see for wealth and insurance firms, is to play a broader role in terms of understanding the customer financial needs and deliver advice or advice plus products where appropriate. So as we go on to more data-driven personalization for wealth management and how it can help wealth managers, let me call out just 5 kind of key aspects, which we think will really resonate with drivers of your business as well. One is the ability to serve more clients and serve more clients efficiently. The second is to be able to deliver advice to a broader set of clients, not just your affluent, but also your mass affluent. Third is to be more targeted and informed around when and how to engage. Fourth is to start to combine the leverage of and the knowledge of the digital channel with the empathy of the human channel, and bringing the right kind of interaction to customers when they can benefit most. And as a result, really driving greater relationship with customers, whether that's in the form of balances or fee income, overall increasing customer lifetime value. The trajectory of data-driven personalization from our perspective is as follows, and this is really the space that Personetics occupies. We start with understanding data, that is, revealing what happened. The second is delivering insights and advice, that is, communicating to customers what's important and what they should do about it, most importantly. The third is delivering this advice in a unified way from digital plus human channels by recognizing how does that customer best want to interact. And then the last step, which is a really interesting advancement, is that when you know a customer so well, you can put in place tool sets that will operate or take action on their behalf, whether to save, invest, or even pay down debt. So we'll dig into each of these in a little bit more depth. Nicole, do you want to start with the understanding the data? What does that mean? And what does that look like for a wealth management firm to really understand customer data?
So I think that there's a few levels here. The most basic level, right? We need to understand what types of transactions the customer is making. And within the wealth management space, that is a little bit clearer cut than in some of the other domains, right? But being able to classify transaction data and pull in that granular level of information about each and every transaction is critical to setting a clear baseline. And then the next level we think about is customers' set of financial relationships. And those financial relationships, some of them, are known, right? When a customer might open up their account, they'll tell you where they hold some of their assets. But the picture continues to grow. So, using the customer's account to learn about new financial relationships, such as a new insurance payment, is really important. And then the third level is the more holistic level around customer enrichment. So what can we understand about one's financial applications and their behavior around how they invest their money, what their tolerance is, and also some types of trends that we're seeing in terms of performance. So those three levels, I would really say, are the base of customer intelligence.
This really goes beyond just the aspect of like capturing the customer's needs as part of a plan, part of a goal plan. This is really what you're talking about here, is actually staying up and adapting with their needs as the data reveals in terms of a changing situation, right?
Yeah, that's exactly right. So I think the point here is that customers' financial lives are dynamic, and we need to be constantly learning about what's going on in one's life if we're actually to stay relevant. So I think that's the point, is that if we're as informed as the last time we took a look, and if we can take a look on a daily basis, the better, the more timely and relevant our information can be.
Very good.
Then I think here, what you can see here is that there's a lot of information that we can now start to extract about a person's financial life if they are, able to share the fuller picture. So we talked about open finance and having a real-time access to people's, essentially primary banking relationships. That's one really high value area. And we can start to see what types of transaction activity they're holding. So in this example over here, you can see that we're talking about a potential mortgage opportunity. So this is an opportunity, more of a product promotion opportunity that a client might have. And this is, an opportunity that came about purely based on data. So it's understanding that the customer recently made a transaction for some type of home inspection. We know that there is it's likely that there's some type of large transaction coming about. So this would be great if this is something we planned for far in advance from a customer, but even if it's not, we can use the data to have some types of follow-up opportunities as well. Mm-hmm. The second way to share this data is, and sorry, I should have mentioned, right, like this information is intended to be spread across the FI. So putting it in the hands of bankers is, perhaps the most powerful place that a wealth management firm can share this information, but it goes obviously beyond that, right? It can be extended to the marketing engines, and it can be extended to some types of next best offer engines if some things like that is relevant. So the point is to make this customer intelligence accessible across the organization. And from the client perspective, right, the digital channels are a key placement to start to talk to clients about what's been going on in terms of their investment accounts. So, one of the ways that, at least at Personetics, we deliver this information is through easy to digest insights. And they can be insights about a customer's recent trades. They can be insights about some types of spikes that occurred. They can be insights around, someone's portfolio is out of line from their risk tolerance levels. There's a really wide variety, but the point is that the digital channel can be a place where a client can go to stay up to date of what's going on. And the banker can be reserved for the more valuable types of activities, talking to customers about growing their portfolio versus just staying up to date. And so these examples are mostly more self-directed as a result. And I think that there's a really kind of critical point here around timeliness. So especially within investment account or trading account, right, there's changes that are happening all the time. And so the digital experience, at least that we're trying to deliver, is one that is extremely up to date. And it's up to date because the content is up to date, right? Pulling information, about recent changes. For example, say there's a change in a risk rating, but it's also up to date because there is some type of regular interaction from a client. So we're only talking about new information that's timely. And that's the type of behavior we're trying to drive, is bring customers into the digital channel on a very regular basis. So when they log in, you're able to talk about what's happened recently and not just what happened in the last month or in the last several months, because they have that kind of constant interaction. And then I think this kind of goes, the digital channel obviously goes hand in hand with the assisted channel, right? The banker reaching out to customers. And so the way that we're seeing this in the market is by having a digital plus human interaction. So using the CRM system as an opportunity for bankers to look through different opportunities and information that they might share with their client if they think it's actually relevant. So use the machine, in this case, to try to identify potential opportunities and share that with the banker. And if the banker thinks they're relevant, then they can start to send information to their client about that, say, new product. And this kind of handoff is also another way that we can start to deliver advice at scale. So keeping the banker at the center of the relationship, but leveraging the customer intelligence and the digital channel in order to deliver some of that information and keep the firm kind of top of mind for the client.
So let me just give an example here around how this may look in practice. Nicole talked about how you might deliver interactions digitally, plus intelligence to the advisor, so you can have a more informed outreach by the financial advisor or the relationship manager. So in this case, we're going to recognize a customer need or an opportunity by looking at the customer data, and we see transactions such as, in this case, initiating school expense, and this customer has excess cash liquidity, and they have a propensity for the advisor channel. So they use the digital channel, but they actually like to engage with their advisor. And what we're going to do then is create a treatment around this opportunity that's been presented. In the digital channel, we will introduce to the customer an insight which says that, look, we can see that you may have a customer, you may have a child that's starting school. Let's talk to you about 529 options, college options. Or are you interested in saving for a goal for your children's education? And even provide a remote appointment setting to talk to your advisor. At the same time, in the relationship manager channel, we'll provide that advisor with this information so that they can have an informed outreach. Maybe in this case, again, it's helping the customer set up a goal for a child's education, or an automated program that can help them save or invest, or even a free financial checkup. And then in parallel with that, we're also putting this intelligence into the customer data platform so that in your next campaign, when you're doing audience management targeting for customers that should be considering setting up 529, that this information will reveal itself and you'll be able to incorporate that into the next marketing campaign as well. So the last step in the data-driven personalization journey is around automated financial programs that are tailored to meet the needs of customers. And this is based on the premise that financial institutions have so much data about their customers that they can invest, they can act on their behalf, whether it's appropriate to save, invest, or pay down debt, and can do so through automated programs that customers enroll into. This could take the form of a smart budget or a program which allows beginning to invest, where the financial institution identifies the amount of money that they can save every month, or a pay yourself first type program where the customer sets up an automated transfer that the financial institution infuses intelligence to determine how much can be saved every month. All of these are intended to deepen relationships and improve their customers' financial well-being. Nicole, perhaps you can talk about what one of our leading clients has done with respect to automated solutions.
I think we like the example from US Bank because of the diverse experiences that they're standing up in order to help people to save and invest in order to achieve their goals. And I think there's two examples here, right? So the first one is called Pay Yourself First, where the bank is, in this case, enabling customers to invest the maximum amount that they can afford when they get paid. So what that means is it's not a standard amount every month. You're transferring, say, 10% of your paycheck, but instead it's using intelligence behind the scenes to understand how much is actually safe to move into my brokerage account and transferring that amount before it ever hits the customer's checking account. And this is like one automated approach. And the second automated approach that the bank is using in the next slide is actually around an automated, it's actually introducing clients to an automated investment approach. So if a customer, they think is a good fit, and every FI can decide who is in fact a good fit for a particular product. But if the customer is in fact a good fit, then they have the opportunity to enroll in an automated investor account and use an automated funding approach in order to add contributions into that account. So the point here is that there are different ways to fund a customer's goal. And some of those can be manual, very traditional, but there's also automated approaches out there that different financial institutions are using. We call them treatments, but there's different approaches out there that are really leveraging the digital channels and some of the automation in order to help customers to take those small day-to-day actions that really ultimately add up and grow the institution's assets under management.
This is really very exciting. It can also, Nicole, be applied in the construct of retirement. So helping customers put more money aside for retirement based on understanding their financial situation. In fact, even maximizing their retirement contribution, which we know many customers can still benefit from advice and guidance on how to do that, and how to do that in an automated fashion as well.
Completely agree.
One of the things that we see, and this is kind of the exciting aspect, is we know that intuitively, that customers will really embrace personalized insights about their wealth holdings and their banking holdings. And we know that relationship managers and financial advisors also appreciate the fact that they can be more informed in terms of their outreach. But what's exciting is this is really showing up in material ways around the business outcomes as well. We're seeing higher levels of digital engagement. We're seeing new account opening and some balance growth. We're seeing both in terms of early indicators and lagging indicators, improvements around customer experience scores and CSAT. And then depth of relationship or retention as well. All of this actually contributing to depth of relationship. And this, of course, the phenomena around both open banking and open finance, as well as data-driven personalization, invites FIs to be very cognizant and meticulous around some of the key enablers around that. So that is ensuring that you have the ability to have a structured data environment for ease of sharing and managing access, to simplify the ability for customers to provide their consent around sharing of data, being ready for, let's say further advancements in privacy laws, that is allowing customers the right to be forgotten, being able to opt into automated programs, but also be able to pause and cancel them. And then we even believe that that when you're engaging in kind of automated transfers for clients, you also need to be able to protect against overdraft conditions. So these are some key areas that FIs should be not just aware of, but be ready to take action on. So that they're leveraging data-driven personalization in a way that really benefits customers, but also protects the institution. So to wrap up here, what I hope we've shared is that there can be a real virtuous cycle or flywheel here in terms of driving relationship depth. It starts with data enrichment, and that really allows wealth management firms to better understand their customer. The second is to deliver personalized insights and advice based on their wealth holdings, based on their bank holdings, and be able to reveal to customers actions they should consider on the bank side, wealth side, or even on the insurance side if customers' income is changing. The third then is to deliver that through unified advice through connected channels, identifying what is most relevant for that customer to deliver digitally, and also when and in what context should the advisor reach out, and what should we be discussing to address that customer need. And the last is in selective situations where the treatment approach is right, think about autonomous finance solutions where you can offer not just the ability to set up a goal and recognize that need for a goal, but help the customer put in with an automated tool to help them achieve that goal as well. All of this then conspires around driving greater relationship depth, and we think that this is really this is the more holistic wave of creating personalized experiences that wealth firms will be embarking on. So just before we wrap, I wanted to thank everybody for their time and allowing us to share our view on data-driven personalization and why it's so important for wealth management firms. Nicole, thank you for your incredible insights. And if any of you would like to learn more or see the content from this presentation, feel free to reach out to myself or Nicole. Thank you.
Thank you.